dug up an article from a newspaper from the 1980s where it was an accountant saying, how are accountants going to learn to be accountants when we're not doing double entry on a physical spreadsheet? Everybody's using computers. This is ridiculous. Like, things change, people find a way. Like, this is a problem that's happened before. You just have to have a slightly different mindset, I think.
Colin, when we were talking about this and this topic of portfolio solutions, I realised I wasn't totally clear about this. So I'm assuming maybe some people in the audience who aren't as well. So just as we get into this, could you just explain for the lay people in the room or those that might have forgotten what portfolio solutions is all about?
In its widest sense, it's anywhere where you're underwriting an insurance risk more than one at a time. So that encapsulates many of the things you've heard today: MGAs, consortia, binders, linesips, etc., and indeed broker facilities. Now, where organisations draw the line between open market underwriting and portfolio solutions varies greatly. So certainly for Canopius Portfolio Solutions, my job is to look after the broker facilities. So almost exclusively what I do is broker facilities, but that's very different elsewhere.
Okay, well, we'll see how different it is or not. Perhaps we should just, Rob, if that's just the Kiln perspective on this.
We take a very similar view. My job title is a bit different. And I actually came into this as an innovation underwriter, so writing the weird and the wonderful. And we got stuck in the portfolio solutions team because we write a cross-class book of business. So we're writing stuff from all over the place in the same way as those broker facilities. And it turns out that actually a lot of the really interesting stuff is happening in writing kind of existing business in new ways. And actually that's where we seem to be spending more and more of our time.
Yeah,
it's a little bit different, but very similar.
The innovation could be writing existing business in new ways, or new business in old ways, or I guess new business in new ways. And Tessa, what about QB? How does portfolio underwriting work there, or portfolio solutions? Sorry.
Yes, so our team consists of two main portfolios. One is the broker facility space, which I think is a very large proportion of our business. We're a market leader in that space. I think we lead a lot of the major facilities. The other portion of our business is the MGA consortia space. And this is where we look to write on a portfolio basis to access, I guess, additional distribution and different market segments that's different to your traditional, I guess, London broker business. We also have a very strong and keen interest in sort of technology and innovation. We support sort of digital algorithmic platforms, and also just have a keen interest in anyone who has a sort of technological edge, and often look to support them.
And you have the benefit of the CEO, Andrew Horton, who's also very sort of passionate about technology and innovation. And
absolutely.
Colum, now if you were still an actuary, I might be careful about asking this question, but you're a former, I guess once you're an actuary, you're always an actuary, but you're no longer doing an actuarial job. What is it you sort of feel really passionate about this year in what you're doing at Canopius?
So I guess not being an actuary anymore, I'm allowed to be passionate now, so I can answer this question. Look, I think the broker facility space offers a huge amount of opportunity for our industry. We're all familiar with trackers, indices, benchmarks in the investment world, and my belief is that this is the space that can do something similar and equally as revolutionary for the insurance industry. And I'm passionate about being part of that.
Right, we actually have another actuary. Do you want to reveal yourself?
I still pay my fees as well, so I can't even qualify as a former actuary. I'm stuck with it.
Okay. Well, you can't undo being an actuary. You work so hard, you can't take it away from you. So that question for you, Rob, then, what's really important for you, and to the extent you're allowed to be passionate and be an actuary?
Oh, there's loads of passionate actuaries out there. What am I don't know if the answer to this is a passion, but it's certainly been the source of the most interesting conversations recently is what impact do tracker facilities, whether they be smart or otherwise, start to have on the market cycle. We talked a bit previously about, the kind of classic view is you've got a whole load of capacity there that just follows somebody else, and so it doesn't exert any kind of weight on things, and maybe it just speeds up and it allows misbehaviour. And I said, well, you can argue it both ways, and somebody laughed at me when I said that previously. And I sort of sat here watching this evening. You've had 5 underwriters on the stage, including us, who represent, if the Insurance Insider is to be believed, about 4 billion, 3.5, 4 billion pounds of GWP, which is pushing 10% of the Lloyd's market, and that's in 5 people. So the concentration that is happening through some of these facilities is absolutely staggering at the minute. And watching, so you won't need that many people to say, okay, enough's enough, rules are changing, for it to start shifting things. So it'll be really interesting to see how that plays out over the next couple of years.
And is that a good thing or a bad thing?
Well, who knows? And I guess the answer to that is it depends on who you are, right?
I think the answer is if it is a force for good, which I think we should hope it should be, but it doesn't mean you get the momentum as opposed to it doesn't actually happen. And I just want to come back on your point about trackers. So I was actually talking to somebody at the weekend who's a year into his career working at an Argo syndicate, and he was sort of asking the question, well, how do I learn as an underwriter now? Because if you're sort of effectively into a tracker syndicate, I think one of you made the similarity to an ETF or an index fund for investing. You're no longer underwriting the way underwriters were trained traditionally. How does something like that actually? How do you build the career of the underwriter of the future if they're not doing the underwriting?
Well, I'm an actuary, so I've got no idea. Just as a counterpoint to that, I read a really great article, and I can't remember where it was, so I credit to someone, it wasn't me, who dug up an article from a newspaper from the 1980s where it was an accountant saying, how are accountants going to learn to be accountants when we're not doing double entry on a physical spreadsheet? Everybody's using computers. This is ridiculous. Like, things change. People find a way. This is a problem that's happened before. You just have to have a slightly different mindset, I think.
But Tessa, for you, what's important this year? What are you getting excited about?
Getting excited. I think, like most people, what's important at the moment is all about the data, isn't it? Data is key. We're all trying to find the best way to draw all the insights from the vast amounts of data that we hold. And that's something we're heavily focused in KBE. I said we like working with companies who are technologically enabled. We find these partners can often deliver much better data quality and often live through their portals, but they often don't have legacy issues that larger, older corporations have. And it's really interesting and to hear, some of the major brokers here tonight have talked about how much investment they are putting into their systems in delivering better data quality. And I really hope that there will be more consistency sort of that's delivered to us. In the meantime, we're using technology, internal and external, to help build what we need.
So you've got people that haven't got legacy systems. This is like insurtechs, brokers,
much newer companies. I mean, you have likes of Insurer, Key. There are, other operators out there, insurtech companies that we know well. Even syndicates. You've got Carbon from Syndicate in the box. People who've built really good data sort of platforms.
And you mentioned live data in there as well. Is that? Can you talk a little bit about how you're using live data?
I think the end goal is to be able to have live data of your exposure, so you can, like we talk about algorithm underwriting, how can you make those changes quickly and instantly? And if you don't have live data, you won't be able to do that. I think at QB are probably quite far away from building something ourselves, but that's why we support others who do it, who can provide that to us.
Yeah, let's pick up on this data, because this was quite a big theme earlier on, and this data is so many different places. Colum, for you, when you think about data, where do you see the greatest potentials are to improve what you're doing? Where we've got a magic wand, either better data or access to data that you already have.
I think it's going to have to start with the brokers. So I think many brokers are using these trackers as a way to fix the fact that they don't have the data and they want it. So they're placed at the conduit of all of this information. So I think it's those brokers that recognise the power of getting this right, using the portfolio trackers, will be, I think, the biggest single help.
And getting data from their clients and then passing it on to you. Yeah. There was another topic that came up when we were talking before, which is about market cycles and how the changing market cycles might be impacted or impacted by or impacted some of these automated underwriting. It came up a little bit before, but does any one of you wanted to pick up on that? I think, Tessa, you were talking about this.
I think it's a really interesting topic, and it's also a question that we're probably all asked, when we've been in this space for a while. During a hard market, we really benefited from it, and our performance has been very good. But the question is always, how you manage the market cycle? There are a number of controls in our, policies, and we work very closely with our cover holders. But the key is going to be the data. If we have the insights and we can have, understand the sort of the levers of performance, and we can get ahead of it and make those changes as we go through the cycle to ensure that it's going to be, a long-term, sustainable for the clients and not something that will just be pulled. I don't really want to be in a space where I'm suddenly just pulling my line out of things because the market's too soft. I'd much rather navigate, through a cycle by having the right portfolio and the right metrics and having partners who want to work with me to build that.
I think just to add to that, sort of having come at this from other parts of a business, it's been really surprising to see how much underwriting control is around some of the tracker portfolios that are out there. That you talk to a class of business underwriter and they say, oh, it's writing everything.
How much the control is there or control there is not?
How much control there is around.
Which is a good thing.
Which is a good thing for an underwriter, but it makes life harder for you if you're a broker, of course. But actually, you look at the underwriting guidelines that are around some of the supposedly dumb trackers, and they're pretty complicated, and there are things that they will do and things that they won't do, and things that are in scope and things that are out of scope, and things that change over time. And they're not just, we'll take everything. That was a bit of a surprise to me over the last year or so, and I think that's something that a lot of people don't understand.
Right, but a nice surprise as opposed to...
It's a very pleasant.
Good, pleasant surprise, good. Right, so last question for each of you. So if you'd like to come back in 12 months' time and be tested on your, we'll call it prediction, or we can just say what's to look out for in the year ahead. Colum, I'm going to go for you first of all. What's the one thing you think we're going to see this year that you would be happy being here in a month's time and being judged on your prediction for?
So I'm going to be biased here and talk about broker facilities. I think we're going to see very large growth in those broker facilities. And I think we'll start to see the divergence of operationally who's doing it well and who's not.
Okay, Rob, for you?
I'm going to get all of the class of business department heads to see the light and understand that me eating their lunch is absolutely for their own benefit.
And you said your boss is in the room somewhere, so that can be part of your KPI for the year. Tessa, for you, for your prediction or anything you'd like to be scored for in 12 months' time?
I think, the space is going to continue to grow, and I think the next 12 months will be interesting. The market is obviously changing, and how people approach it will be interesting, I think. But I do think it is long-term and it's sustainable. So I'd like to see sort of, I guess, what the market looks like in 12 months' time. Will it be, especially people who aren't in the space, how they plan their strategy. And it's fine to not be in it, because it's obviously we're in it. So it's more competition for us. But it's also around what the broker's strategy is going to be in terms of their placement. You've got the Oxbow report, which talks about what a future slip looks like. I'll be really intrigued to see how that looks like in 12 months' time.